All right, good evening. I see we still have an audience, which is great. Okay, why don't we kick it off with a brief intro, 10, 20 seconds about what you guys are building.
So, hi, I'm the CEO of Minteo. We're a stablecoin issuer and settlement layer for Latin America. We issued our first token, COPM, the tokenized Colombian pesos on-chain.
Hey, I'm Julian. I'm the Treasury Manager of Non-USD DAO from Karpatky. We are building deep liquidity for URI and GBE in Gnosis chain, which are very important for Gnosis Pay.
Hey everyone, my name is Markus. I'm working on Mento, a multi-currency EVM platform that provides local currency stablecoins for every country in the world. Just launched a Kenyan shilling stablecoin, for example.
I'm Chris Duffus, founder and CEO of Fonbnk. We're a type of on and off ramp to Web3, targeting mobile-first, cash-based economies like those throughout sub-Saharan Africa and the global South. We work with a number of leading protocols like Celo and Mento to make that happen.
Okay, so we've spoken about USD-backed stablecoins throughout the day. And so this panel is on non-USD-backed stablecoins. USD-backed stablecoins have found product market fit, like it's majority of the market share. Why are non-USD-backed stablecoins important to the ecosystem? Like, why should we care? I'll open it up, the floor to anyone.
So I guess in short, they level the playing field. I mean, right now, most of crypto is limited to the developing world. If you want to reach the rest of the world, like everybody has their own local currencies. And this is sort of the on and off ramp, the way to gain access, the way to actually be able to build like derivatives, every kind of financial product is through like non-USD coins. Otherwise, it's just going to be limited to like pretty much crypto in US, Europe. This is the way to actually like bring crypto to the entire world.
I think that overall, we can think of general stablecoins of having 4 use cases. One of them is cross-border payments. Another one is trading crypto. Another one is holding US dollars or holding a currency. And the fourth one is on and off ramps. And if you think of it for a second, the first 3 are actually mostly for the US dollar. So in the end, the product market fit that non-USD stablecoins can find is being on and off ramps, at least for now.
Yeah, and I want to add to these points. I think multi-currency stablecoins are a great addition to dollar stablecoins. If you're in a country with high inflation, where your local currency loses value against the dollar, then of course dollar stablecoins are great for saving if you want to move into a stable currency. But on the other hand, if you're a local entrepreneur, you would want to get a small loan, then you probably want to get that loan in local currency, because if your revenues are in local currency and you only have access to a dollar stablecoin, then paying back that loan can become really expensive as soon as your local currency loses value against the dollar. And then, for example, non-USD stablecoins can provide a lot of value, access, for example, to credit in your country, in addition to the use cases that you described, like saving, payments, but also remittances, and of course the whole on-chain FX space that hopefully also matures and more people actually bring their FX trading also on-chain.
I would add that in order to make, this a nuance, many of you said is on and off ramp, right? Well, if you add the availability of local stablecoins, it becomes payments. Like, oh, I want to pay for a cup of coffee. I want to pay for a cab ride, right? And ultimately what that does is provide accessibility to the broader group of people on this planet. And you think about US dollar-backed stablecoins, it's really a wholesale product, right? And in order to bring Web3 to the masses, you need a tool or product that's way more accessible, and that's where these come into play.
And you guys are all innovating at the edge of this market. I'd be curious, like, what does the landscape of non-USD backed stablecoins look like? We understand the gold part. There's some new energy stuff happening. What is paint a picture of the landscape of non-USD stablecoins?
So I would say it's nascent. Probably there's not many people outside the ones in this room working on that. And I mean, crypto and stablecoins are very much new. So like 6 months ago, nobody was working on yield-bearing stablecoins. A couple of years ago, nobody was working on stablecoins at all. But I think it's going to be very big very soon. But I mean, right now it's very limited to like a couple of companies who have done like centralized coins and sort of like the other things you guys are building.
Yeah, and I mean, we heard in the talk by Jasper before, we are all about stablecoin diversity and want to see more and more stablecoins. And I think we've also seen in that talk how big the existing, especially the two big dollar stablecoins are in comparison to these things that are starting up. But I think it is very young, a very young industry, but still the use cases are there. So I mentioned that we just launched a Kenyan shilling stablecoin. Africa for us is extremely important as a market. There you can see first micro-lending organizations starting and providing loans in local currency stablecoins to small entrepreneurs. You can see on and off ramps like Fonbnk and many others getting like broader and broader market access and actually become more accessible to everyone there. And I think this is the key here, that it makes things like lending, remittances, payments more accessible to everyone, especially in areas like LATAM, like Africa, where traditional banking system just doesn't work as it does maybe here in Brussels.
And where would you say most of the demand for a non-USD backed stablecoin is coming from? Is it from the citizens of these emerging countries? Like, where have you guys found that it's coming from?
So it's real-world use cases, and I like to categorize like stablecoin usage in 3 categories, or like as a store value, which is like USDC, USDT. Then there's like stablecoins as investment products, or like USDM, Ondo, Ethena, and there's like stablecoins that are like infrastructure for financial stuff. So like payments, what we've been talking about. Most of the use we've been seeing are like for financial infrastructure. So like settlements, payments, remittances, derivatives, etc. Like as an alternative to like legacy financial infrastructure.
Yeah, I would add that in order for them to even grow their demand, there has to be some new products coming in that unlocks the power of composability. Because the reason why people is using US dollar stablecoins is because they get to access a global settlement layer. But if you're going to transact in the local currency, you don't need to access this global settlement layer because the transfers of local currencies are instant normally and free and easier to access. So there has to be a reason for users to move to the blockchain. And in order for that to happen, there has to be new things coming in. A good example is Gnosis Pay, of something that is leveraging a non-dollar stablecoin with URI. There could be like some guarantees that powers like smart contracts and basically kills the middleman of the bank for a guarantee, because you can use a smart contract for that. Things like that truly leverages the power of decentralization and censorship resistant are things that are going to bring people to this.
I would even add, in many of the markets that we operate in, remittances are a huge part of their GDPs. And as you indicated, there are a ton of different intermediaries that sort of make that happen, as well as fintechs that have evolved just to support sort of local currency payouts within these respective markets, and everybody adds a fee. There's delay in terms of that value chain, and this could be in addition to that flat settlement layer of stablecoins that can make sort of global real-time payouts a reality for people that need it the most.
Remittance is really a big use case, and I want to add and mention it again. I mentioned it before. The whole credit space, there's, I think, globally a $5 trillion credit gap that especially affects countries where the banking system is less effective or less evolved, and I think resolving that credit gap can actually have a huge impact on these countries. And it's a killer use case if on the same platform, in the same wallet, with the same on and off ramp, you actually can get access to a dollar stablecoin to save and to a local currency stablecoin like the Kenyan shilling or others to borrow and to get a loan. All on the same platform, all on your phone. I think this is really a killer use case for stablecoins.
But I'm curious though, who's going to provide the liquidity for these loans?
I think in the end, liquidity is always hard. And if we want to build stablecoins, many different stablecoins, and we heard before, we are all for stablecoin diversity, we always have to work on liquidity for each and every stablecoin again. So I think here infrastructure is key. That's the first thing, to make provision of liquidity very, very easy. That it's actually also possible in the stablecoins that we build that you can go easily into other currencies, maybe even into from a local stablecoin into a Kenyan shilling stablecoin, so that actually nobody is afraid to touch your local currency. And then more and more micro lending organizations actually are really open to use stablecoins because it makes their operations really, really efficient. And then in addition, and this is maybe a bit more out in the future, having everything on chain provides great data for lenders. You can build up new forms of a credit history that is linked, for example, to your phone number, and maybe even linked to paying back your phone bill or how active you are on Fonbnk. This can all count into your credit history and therefore enable actually people to make good judgment if you should provide capital for that.
I want to add that it's also good business. One of our customers, Tropicus, is building through this, and just to give you some context, there is an opportunity for interest rate arbitrage. Usury rate, for example, in Colombia, where I live, is right now at 3%, 3-0. That's the usury rate for banks. So you can literally lend out money at 30%. And if you see our local coins like Mexican peso, Colombian peso, we've had 20-30% revaluation against the dollar during the last year. So if you had put money in a pool in USDC against pesos and collateralized loans in local currencies, you would have made a killing during the last year. It would have probably been one of the best performing products. So there are a lot of interesting opportunities. I just think the infrastructure is starting to get built out, but it is going to be very profitable. And at the end of the day, that's what banks are doing. And if you look at Southeast Asian banks, Latin American banks, they're very big. They make a lot of money.
And I'd add to the most simple level, this reduces friction of movement of money, right? And I don't know what that equation looks like, but it's for every percentage point reduction in the cost of moving funds, it probably increases some amount of liquidity for the counterparty, just because I can now go back and forth.
It's more efficient.
I don't think it reduces friction. It's very hard to onboard users, and until you get a very large amount of users, it's actually adding friction.
This is changing quickly. If you compare today to maybe 2 years ago already, this is completely different world, where we have now more scalable chains, where we have more affordable on and off ramps, where we have easy to use wallets, where we have more and more infrastructure that actually supports this. So I think, yes, you're right, there's still friction for sure, but this is being reduced every day.
Yeah, and the nuance though being sort of adoption friction versus transactional friction, right? I think that problem is being solved daily, but I think at a broad level, it's, how do I get a local currency, who are the counterparties, where can I spend this at, and to the extent that they have liquidity for their goods and services, you'll start to see adoption. But this is where things like, I think, remittance are a great use case, because if you drop a couple $1 billion of this, into people's hands in a particular country, they'll figure out how to, utilize that in their economy.
Okay, instead of just in case we don't turn into a debate, you guys were alluding to this. What does, let's say, all the emerging markets, they have their own stablecoin, they're running on chain. What does this unlock for that specific market, for that specific nation state? What does that look like?
I think it unlocks access to a lot of probably financial products and tools, and once again a global settlement layer than otherwise they couldn't. I can tell you as Argentinian, the main reason that everyone is we get access to dollars thanks to stablecoins, and an Argentinian stablecoin, I don't think there is one, because it would be like a very shitty business. Yeah, it could definitely make it easier, the on and off ramp.
There's an analogy which I very much like, and it's I feel like right now, in most emerging countries, we live in a world where everybody decided to build their own roads in front of their houses. So one is a brick road, the other one is a cement road, and they're all different widths. They're all different materials. It's terrible. If you're gonna ride a car on it, it's a horrible experience. I feel like what blockchain technology and what cryptocurrency does is it's the same paved road all the way. It's standardized rails. As soon as you have those rails, you're gonna be able to build amazing buildings, stores, all these infrastructures. Sometimes for people who don't live in emerging markets, it's hard to realize how shitty financial products in emerging markets are. They're terrible. They're expensive, they're slow. And this is gonna give access to I don't know, billions of people to much better financial products. And it's gonna enable, millions of businesses to build much better infrastructure, much better products for consumers.
I love the analogy about the private roads, and I totally agree. And I think ultimately what this will do is drive global scale. And in the same way, you have certain countries or companies in developed markets that can now sell globally. It will either increase their market, but also can enable the development of global companies and opportunities from within these emerging economies, because now they can operate on the same level as US or Western companies.
Making financial primitives accessible is a really important part to all of this. And I think it's interesting, for example, I mentioned Kenya before. If you look at mobile money in Kenya, it already unlocked access to at least parts of finance, but it actually did it in a closed way. And if you now look at the payment system in Kenya and mobile money, it's super fragmented. So it actually they're really hard to either go cross borders or to go someone who has a different mobile carrier than you have. So this is an additional advantage, the way that we are building it in an open source way, in a permissionless way. It unlocks even more, because then all of this, what we are building, works with each other and can therefore unlock growth for these economies.
Yeah, makes sense. So I'm actually from Barbados, and previously I could never access Treasury bill yield ever. Well, thanks to Mountain now, I can. So it's pretty awesome to see the development. You guys were mentioning this earlier in terms of the driver for adoption for these types of stable coins. What are the vehicles? So what do you guys see as the most important drivers to gain meaningful adoption for these types of assets?
So again, I think real-world use cases, remittances, payments. I guess what we've been talking for some time now, it's not speculation. It's not necessarily for financial usage. I think it's more for getting to real-world users and getting financial products in their hands. So,
and to unlock, of course, easy to use wallets. We heard from Mobile Stack today. I think this infrastructure that is more and more available and easier to use is important, accessible on and off ramps. Things like Fonbnk in many different countries is important to unlock this so that people can easily access these stablecoins and swap from one stablecoin to the other.
And I'll give an example of a specific use case that we implemented where people are familiar with the concept of an airdrop. Well, we work with the Stellar Foundation a couple years ago, 2022, 2023, where actually grew a third of all their Stellar USDC wallets globally. And what we did was we enabled a small little airdrop, like $1, and allowed people to convert it on chain or to top up their phone. Most people topped up their phone. And the feedback we got was that they're like, oh, this is real. This thing that lives on chain that, people have told us to be too wary about, I can actually see the merit of that in real time, right? And so we talk about sort of real world use cases. Here's this sort of electronic digital asset that, people can consume and the average person can consume in many of these countries. So it's highly accessible, right? And so these are the types of things like what are equivalent sort of digital commodities within these respective countries. And I think those are gonna be the low-hanging fruit. Obviously financial services can be digitized more easily, but there are others as well.
Just to give another example, 1 year and a half ago, like the circulating supply of Monerium on Gnosis was maybe like 1.5, 2 million. Now it's around 13, and it's a growth of, 6 times or something. And the reason is Gnosis Pay. Like people is using Monerium to transact. People is demanding URI, it grows. It works like that. You need use cases.
Gotcha. Let's say 10, 20 years from now, what does the landscape look like?
Who knows?
That's like 3 lifetimes in Web3, so it's a very long time. Certainly we want to work on having a stablecoin for every country in the world, maybe even more local, having also enable also local currencies in different regions. But I think even more there, that by that time, hopefully also the traditional finance world understood that this is really efficient way to send money cross borders, cross systems, and therefore also institutional world, the whole FX trading can come on chain. And I think already now having different currencies on a blockchain enables so much arbitrage trading that you could do as an FX trading house. And I think this is also something we'll see more.
So for me, stablecoins are better infrastructure for financial and banking products. When there is better infrastructure, it tends to dominate very quickly. Even if you see, like, when they invented containers, like, it was very, like, before containers, people were like, everybody came up with their own way of shipping things. Like, let's wrap this in paper, let's do this thing. And then they came up with containers, and like, 23 years after, like, nobody thinks of shipping anything outside of a container. It's kind of crazy. Or the same thing as roads. Like, we have standardized roads. Like, they're made out of the gravel. They're the same width. Cars are sort of standard. Like, everybody builds the same kind of cars and the same kinds of roads. I think, like, 10 to 20 years out, like, pretty much all bank money is going to be stablecoin money. I don't know if it's going to be centralized, decentralized, if it's going to be 200 issuers. But I'm very confident that most of the money in the world will be, like, based on stablecoins. Like, probably the one feature that I think is lacking for it to be completely dominant is, like, privacy. And there's a lot of people working on that. Like, but once we have, like, good enough privacy, I think it's going to completely, like, take over, like, bank money or, like, legacy money, however you want to call it.
I might add too that to your point about, like, what this future looks like, centralized, decentralized, sort of stable coins, good news, bad news. I think the good news is you're going to have this technology available globally accessible. You're going to have certain economies that can take the private sector into their hands and trade globally and maybe receive financing, from these big institutions. I also think it may lead to global scale financial institutions like the Citi or Goldman Sachs or JP Morgan that dominate, this sector globally, right? And so we have to think about what does that decentralized alternative look like? Otherwise, we're going to have the same old thing again.
I agree with you. That's why I'm saying I'm pretty sure it's going to be stablecoins. I'm not sure if it's going to be like a decentralized organization or if it's going to be JP Morgan actually dominating the rest of the world. It might be the incumbents getting this new technology and winning the game again. Hopefully not, but you never know.
Well, luckily these types of technological advancements create inflection points, so maybe it'll be one of us.
And the technological advancement also creates choice for the user. I mean, even if 10 different central banks come up at some point in the future with central bank digital currencies, we can use them as collateral. We can diversify over these different central banks because there are for sure 2 bad central banks among those 10s. And therefore, we can diversify and then can offer the user choice what they want to use.
But it also could enable countries like Barbados or Bermuda to be globally relevant from a banking perspective.
Actually, as a closing exercise, let's imagine I'm Congress, okay? Pitch me why I should create a Barbados stablecoin.
So I'll tell you why. If you don't do it, you're just gonna lose power to USDC, because a lot of financial products are gonna get built on that. A lot of people are just gonna start using that. So if you don't it's not why would you want to do it? Why would you not do it? You're gonna get you're gonna be in a very bad position. That would be my first argument. It's already being done. You might as well do it.
And if you're Congress, I would say this would be actually the first time you could do monetary policy, because currently you can maybe guess how much money is in circulation, what the velocity of your money is, and then you can try to influence that by setting interest rates for your banks and hope that these banks will actually forward these rate changes to your citizens. So basically, your monetary policy currently is guessing and hoping when you have technology that allows you to incentivize and to actually directly not guess, but see what the velocity is. You actually have a much bigger tool set.
Right, and I would add access to your diaspora. Imagine now and I'm from Jamaica, so we have probably more Jamaicans that live overseas than in Jamaica, and that is such a powerful sort of aspect to these countries that, when a president, prime minister runs for office, they don't just campaign in the country. They go to all the big cities around the world, and so if you're able to now economically tie them, that's how they're gonna send remittance back. It'll spur trade and investment, and I think that's priceless.
So do it now or get left behind. It's kind of the pitch.
And going back to his analogy, why would you prefer to have a worse road than a good road and the same road as everyone else in the world?
Awesome. Cool. I think that's it for now. Thank you, guys. This was a great panel.
Thank you.
Thank you.